You are on the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 250,000 reputation points. And what I love the most is sharing educational breakdowns that show you how you can be looking for the best trading opportunities in the market. So without further ado, let's go and see which is today's Forex pair that we need to break down. In today's video, we will be breaking down GBP and ZD, a pair that at the moment is quite interesting both from a structure and price action perspective. And as usual, I will be keeping this analysis as educational as possible. So first, we will be covering the technical aspect of the market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds are doing in the market. And by the end of the video, by using the combination of these two different types of analysis, so technical and order flow, we will be able to understand where we have the highest probabilities for a nice opportunity on this pair. Now, starting here from the monthly time frame, what do we see? Now, here on the monthly, we can see that this area was acting as very strong previous monthly support. The market then broke the level to the downside, and at that point, previous support was turned resistance. However, the market then broke back above this structure and went for a retest right here, which makes it, once again, a new support area for this market. And in fact, the market currently just tested and started to reject this new support to the upside. Now, generally speaking, after the creation of an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has just corrected exactly to the 50% of the Fibonacci taken on the impulse leg, from which we did expect the market to provide a rejection to the upside since it was creating a confluence of support, 50%, with the previous resistance turn support. So at the moment here on the monthly, everything has been following exactly what we usually expect in this kind of situations, and we do have bullish structure on it. Going down on the weekly time frame, what do we have? Now here on the weekly, we can see that the market has just provided a nice impulse to the upside, followed by this correction. Now, generally speaking, after the creation of an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has just corrected exactly to the 0.618 of the Fibonacci taken on this weekly impulse, which is a quite strong supported zone that we did expect the market to test before a potential rejection to the upside. And currently the rejection is happening exactly as usually the market behaves in the specific situations, rejecting the demand that we had inside of this zone. So also weekly, everything is bullish. Just a quick thing, for more educational breakdowns, make sure you subscribe to the channel and hit the bell. Going down on the daily time frame, what do we see? Now here on the daily, I had spoken about a GBP and ZD in the past. I made a full breakdown after the creation of this W formation here. When the market was at this level, I made a full breakdown explaining all the reasons for which we expected the market to provide this move to the downside, and in fact, that is exactly what the market did. And by the way, I will link this previous analysis in the description, so you can go and check it out for further reference and more free education. However, at the moment, what do we have and how we can be looking for the next potential opportunities on this pair? Now, at the moment, here on the daily, what we can see is that the market is currently and actually has already broken above a quite strong historical structure level for this market. In fact, this zone was acting as resistance here, again resistance here. We then had the break to the upside, and at that point, this previous resistance was turned support, break to the downside, at that point again resistance here. And as the market has now broken once again above this structure, this previous resistance is now turned support. And what we can expect is for the market to go for a retest of this previous resistance turn support before starting a rejection to the upside. Now, after such an impulse, if you want to measure the correction, you have to take your Fibonacci on the impulse leg. So basically from the low to the high of this impulse. And if we do that, what we can see is that we have the 0.382, so basically the first Fibonacci level that is aligning perfectly with this previous resistance turn support, creating a confluence of support in this area that we do expect the market to go and test before a potential rejection to the upside. So at the moment, here on the daily, everything seems quite bullish. We expect the market to provide a correction to this area before the continuation to the upside. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds and the non-commercials in the market are doing, which basically are the biggest speculators, what we can see is that with the last reports, the pound has been getting strong. In fact, we went from having a massively negative net positioning with 47k shorts and 27k longs from an institutional perspective, all the way up to having 52k longs to 32k shorts. So basically, we went from having more shorts than longs to having more longs than shorts from an institutional perspective with 19k net positions. With the very last reports, we have seen 1.7k shorts added and 7.6k longs getting closed, which indicate that we could see some weakness of the pound, which could easily make GBP and ZD provide this correction. But as usual with students, what we will be doing is being reactive and not predictive. If the market will actually provide a correction to this area, then inside of here, what we will be doing is monitoring price action from a 4-hour perspective and lower. Now, why 4-hour and lower? Because monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. But when it comes to confirmations and entries, the best time frames are the 4-hour and the other intraday timeframes. So if we will have a correction back inside of this zone, inside of here we will be monitoring price action from an intraday perspective, and if the market will shift from an intraday bearish to an intraday bullish market at that point, we will be adding GBP and ZD to our watch list with students, and as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete this impulse, correction, and impulse pattern to the upside and creation of a higher high. If you enjoyed the video, make sure that you smash that like button and comment below. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade the strategies with me. In fact, every day I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And we also have a daily Q&A session in which I answer all your questions. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.